Wouldn't it be great if you could see the price action before it occurs? In other words, before the rocket ship takes off. Well, that's what we're going to cover in today's video. My name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008. Where I only used to focus on currencies, but now exclusive on cryptocurrency. If you're brand new to the channel, subscribe because we do daily content every single day, helping you increase your financial health through simple crypto and blockchain education. We're going to dive deep into Elliott wave patterns. Yes, the market moves in fives and threes. And if you can identify these patterns of human psychology in advance, you can get the edge and buy at the low and have a higher probability of selling at the high. And that's what we're going to focus on. So let's dive straight in. So we are looking at Solana, and I've taken the date back to, when was it? It's now the 19th of July. 19th of July. So this is part 2 of a 9-part series. In part 1, we covered 2 momentums, the weekly being oversold and the daily being bullish. That is really, really key in this particular strategy. What we're going to look at next is pattern. Is there a key pattern that we're seeing in front of us, fives and threes, that we can identify in advance before the next wave takes off? And Solana really took off. Here the price is $24 back in July last year, and we actually identified this in advance. And then it went over $200, which is over a 1,000% gain on the upside. But how can we see that this is coming towards the end of a trend on the downside before a reversal? Well, there's a couple of key things that we want to focus on. Now, keep in mind that we've backtracked to July because the lesson is, how can we get high probability setups before they occur? Now, with Solana in particular, what we can see is that it's done a 1, 2, a nice wave 3, 4, and a 5. And after a 5-wave sequence, what tends to occur as a minimum is an ABC correction. And we're always looking for these corrections. This is the first degree of count, an A, a B, and what looks like a C forming. Very, very important. Now we're going to keep it really simple in today's part. In the next part, in the next video, we are going to go into how we can go into a bit more depth. But let's just really, really clarify this. So we've got an intermediate wave count. Now what most people don't realize is that there's waves within the waves of different degrees. So what we're seeing over here, and I'm going to label this, and this is how I want you to label your charts, and you'll see this time and time again. We're focusing on Solana over here, backdating it, but it's really the lesson that we're looking at, the psychology of buying and selling, human behavior of mass herd psychology playing out. So here we've got this nice wave 1, a wave 2, a wave 3, a wave 4, and a 5. Now, there's always a degree of count above and a degree of the count below, and we want to use both to our advantage. So when we see a 5-wave move to the upside, and there's no, and it's all-time new highs, the wave count is actually a wave 1. Oh, what'd you get? Yeah, this is a 1, 2, 3, 4, 5 of a wave 1. Now, if you're not familiar with Elliott wave and Fibonacci, you'll get to learn by following my stuff, even taking my free Elliott wave Fibonacci masterclass. We'll talk about in a bit, but it's in the link below. I cover in depth that you'll see these patterns unfold on the upside movement. And then after a 5-wave sequence, you'll typically get an A, B, C as a minimum. But an ABC of a what? Well, after a wave 1, on a macro comes a wave 2. And markets tend to move in 5s and 3s. And around 50 to 60% of the time, these patterns are very evident to see ahead of time. Now, what we're looking for, what we're really looking for, if I just delete this now, is after a wave 1 and a wave 2, what typically occurs, which we're going to cover in a later lesson in this 9-part series, we're on part 2 of this 9-part series, is this. But what we're aiming to do is identify in advance this high probability low before it takes off. So what we've covered in today's lesson is a wave 1, 2, 3, 4, 5 of a 1, and then an A, B, C, what looks like an ABC of a wave 2 low being formed. What we're going to cover next And I want to just loop back on the first lesson actually before I tell you what we're going to cover in the next part of this series. Is what we covered in the first part was that the weekly momentum was oversold, and we said in the next daily bullish reversal, we should anticipate a low being made. I'm just going to double check I got the right indicator here. Yeah, we have. So we can see over here that the momentum is deeply oversold as it is in the lower part of the chart over here. And when the blue line crosses over the red, and when that coincides with pattern of an ABC of a wave 2, that gives us very high probability that we're coming towards an end before we see the beginning of a wave 3. So that's what we're going to be patient for, to wait for. Now, if I just unfold this data over here, boom, that point over here is where we want to pay special attention to. Because what most people don't realize, and I want you to realize this, because we want to identify this in advance, is a wave 2. So we've got a wave 1 and a wave 2. A wave 2 is actually a retest of the wave 1 low. And it normally comes down to particular ratios, which we're going to talk about again in another lesson when we talk about Fibonacci price, helping us get a complete picture of the mass human psychology that's playing out right in front of our eyes. Now, we know if you've been following Solana, it went from $25 to over $200. But if you look back at our YouTube video back in June, July last year, we identified this in advance before it took off. So now we've got momentum, which we covered in part 1, momentum on the weekly and the daily. And now we've got pattern on 2 degrees. 2 degrees meaning a wave 2, which is 1 degree of count. That's called a macro. And then we've got an A, B, C, which is 2 degrees. So now we've got really 4 things telling us 2 degrees of momentum and 2 degrees of pattern, saying we should anticipate a trend reversal. But can we do better? Well, in the next lesson, in the next part of this 9-part series, what I'm going to dive into is how we can get even more precise, knowing, and I'm going to teach you this, how wave C's typically break down. Is there a pattern that we want to be aware of that's unfolding here for this wave C that really allows us to narrow down this low down here before a high probability wave 3 takes off? Keeping in mind, again, that wave 2s, they act as a launch pad, almost like a base, like a launch pad for a rocket ship before a wave 3 really takes off, And if you want to learn more about Elliott wave and Fibonacci, where we talk about pattern, which we covered today, we talk about price, which we're going to cover in another part in a future lesson, and where we cover momentum as well, and we're looking for something called a confluence of events, where ideally 3 pieces of information, momentum, pattern, and price, are telling us the same thing, which gives us the edge and the probability of getting it right, and then we ride that trend. And in Solana's case, it went from $25, $22 to $25 to well over $250. And we saw it in advance. So don't forget to like, subscribe, hit the bell notification if you're liking the content. It really shows your support for the channel. Take my free Elliott Wave and Fibonacci Masterclass, where I really break these things down for you so you can see it in advance. So let's finish today on a quote. Today is chapter 5. It is Leonardo da Vinci. Simplicity is the ultimate sophistication. I like to keep things simple. Now, all we're using is momentum, pattern, and price. Today's focus was 2 degrees of pattern. In part 3 of this 9-part series, I am going to go deeper into a 3rd degree of count, where we break down what a typical wave C looks like, where we can get really precise at the end of a wave, what we're going to call 5 of a C of a 2 before a wave 3 trend reversal. I will see you in part 3. See you soon.